Hi, Larry Berman here, and here's what's on my radar this week. And it's actually quite difficult to be positive and optimistic and excited about what's going on in the world today. I don't have a yellow and blue, but I'm trying to wear my Ukrainian, at least half Ukrainian colors today. My great grandfather was born just outside of Kiev, and I guess we used to call it Kiev, and that's the Russian pronunciation of it, and Kiev is the Ukrainian pronunciation. So out of respect, I think the media is now calling it Kiev. And anyways, neither here nor there for markets. But when I saw the news last night of the explosion at a nuclear plant, Chernobyl obviously came to mind, and I literally had a tear in my eye because it's a humanity issue going on here, and it's just had a conversation with a political friend of mine discussing what's going on in the world, and this is it's staggering, and we're talking about Putin being a rat in a box running out of food, and how desperate a rat would get. And they would chew through walls, and they would do anything to survive. So, are we at that point yet? Boy, we hope not. But when the leader of France comes out and says it's going to get worse before it gets better, I just got off the phone with the guy. You got to think that it's going to get worse before it gets better, because if there was a real diplomatic solution, it would be happening now, and he wouldn't be killing all these innocent people. So, that's really what's on my mind. And obviously, Jerome Powell spoke this week. Bank of Canada started raising interest rates. The Fed has a very, very difficult task here of creating a smooth landing and a soft landing. Powell said he could do it, but really, what else is he going to say? No, we don't have the tools to deal with this, because regardless what the Fed does with policy, it's not going to fix the supply chain issues, and the fact that 30% of the world's wheat, comes from that part of the world, but most of that export goes to Northern Africa. Like you put all these things together and try to think about the knock-on effects and ultimately what that means for earnings. A couple of our holdings, have anecdotally or exposure to Russia. We have a very minimal exposure, thankfully, but some. And BP and Shell are two oil companies that we think really well suited, big upside potential. One of them owns a bit of Gazprom, and one of them owns a bit of Rosneft, and so those stocks have been hammered as oil prices are going to the upside here because of the Russian risk and exposure. So all that stuff has still got to filter through. I put in a call to Van Eck ETFs this week, and I got a call set up with their portfolio manager who runs the emerging market debt fund, and get an insight into how they're going to remove the Russian bonds from the index at this point. Obviously, when there's forced liquidation from an asset, there's actually some opportunity to potentially make money off of it. And so here's the conundrum, folks. Do you actually try to profit and buy some Russian exposure, knowing that the whole world is selling it at bottom basement prices? And then the second part of that is it actually worth anything? And I remember after 9/11 trying to give investment advice, and it was very difficult. How do you come up with a strategy to try to profit off tragedy? And nevertheless, it's kind of a fiduciary obligation to mitigate risk and to do that for our clients. So those are some of the things we have to think about. But it does become, a big challenge in terms of, being out there and pounding your fist on the table. On Berman's call a couple weeks ago, we basically called Russia uninvestable, but there were a couple of companies there, Yandex. I think it's still going to be a real company. Obviously, their ability to grow internationally is going to be curtailed significantly. The telephone company of Russia, What does that look like? Well, it's still going to be the telephone company of Russia, but what can profits escape Russia and get to the rest of the world? And it really looks like it's going to be a difficult situation for a while. But any day now, any minute now, Putin's going to get into a position into Ukraine that he wants to be in, and then he's going to say, okay, let's sit down at the table. And we're going to have a risk-on rally for 2 weeks, or whatever, and the markets are going to rip higher. But ultimately, inflation is going to be worse. It's going to be harder to create a softer landing, and the idea of a policy mistake and an inverted yield curve continues to build. And that becomes a challenge for everybody in broader markets and valuations. So those are some of the things I'm thinking about. Bull and bear pick of the week. Caution is still the best consideration here. And I thought about showing you some charts this week, but really there's no levels. There's nothing that stands out. I mentioned be long silver, bullish there. Still love that. That's been working out really well this week. And again, kind of hate to profit from a situation like this, but it is what it is, and there are things moving. I did this week unload a significant portion of our overweight exposure in energy. It's been a real positive to the portfolios this week, but this year. But when that headline hits, that they're coming to the table and there's going to be real talks about a settlement in that part of the world, and the heated tensions will calm down, and I hope that's very soon. That everything that's going because of that is going to unwind. You could see oil prices that are now $110, $113, front month WTI. Maybe it gets to 120, maybe it's higher if you believe Goldman Sachs, but ultimately gets reversed and comes back down to where it would have been 70, 80, 90, somewhere in there of a more sustainable world price, and then we'll kind of see how it plays out. Those are some of the things on my mind this week. Anyways, Godspeed, and I hope everything plays out with less human casualty.